Supply and demand is the main focus of what we need to be viewing right now with the market. Now, what do we always say? Every day we've been talking about staying liquid, staying liquid, staying liquid until you get a break of the trend. And I think today is a perfect example. Now, there have been some pretty good setups coming in the works, and I'm not gonna lie, I've gotten a little bit aggressive and started some positions, but let's talk about what's happening here. Now, what we're gonna do first is look at level 2 data, look at some buyers and sellers. This is Bookmap. The link is down below if you wanna check them out. Now, what I wanna show you, and all this is just showing you where buying and selling orders are and when they're actually getting hit or if they're being taken off the book. Now, today we saw something interesting. We saw at 40.55, 1, 2, 3 times that a big buyer was putting in some orders, right? This wasn't a major size position, but we continue to see a constant here. So what do we see? This morning early on, 9 o'clock, we come down, touch near that area, about $3 off, we bounce up, come back down, come into it, we keep breaking below. You can see the strength of these, that buyers are trying to hold you up. You sold through, making lower highs. You come and test it again. And then what happens again? You make another lower high, you come back down, test it again, and then we bounce at the same level over and over and over. And we talked about this in the live stream earlier, and again, we're live every single day to 10:30 to around noon Central Time, so make sure you check us out. Now, this is interesting. We saw this be a key area, and we saw a little bit of a more key area around 40.50 where they really wanted to secure us. And we saw once this order came in that buyers kind of took a little bit of control. Now, I want to talk about what happened in between and where I see us going into next week. Now, before we get into that content, I have to ask you to do 2 things. Please like, and then I ask you to consider subscribing. I don't ask you to subscribe. I ask you to wait, watch some of the video, and see if it's unbiased. See if it's something that could maybe give you an edge in trading. That's the goal of the channel here. When we come every single day to the plate to come to the stock market and try to make money here, the goal is to stay as unbiased as possible. And that's what I pride myself here on the channel. Not to give you signals to buy or sell or be a Faru and tell you where we're going, but to ultimately be an indicator, okay? That's the only goal, and really what Option Drops is trying to do is give you an edge every single day. I also recommend, this is absolutely free, the Discord link is down below if you want to be involved with all of our traders. There's a cap there right now, and I think we have about maybe 20 spots left total. But if you look right now, the newsletter, absolutely free. This is last week's newsletter. I recommend checking it out and seeing how these levels were respected. All the key levels, supply and demand zones, what to be expecting on some of these big names. Of course, you have your economic calendar for the week, earnings, and a little bit more. We're going to be throwing more and more information in there for you guys as well. As you can see, we're not trying to sell you anything in there. Now, when we jump back into supply and demand, let's talk about what's happening here also. Let's get a little bit of a zoom out. Now, when we look at volume on the day, first things up, we can come in real quick, get a little bit of a refresh to give you more accurate data here at the end of the day. Around 74 million. Your 30-day moving or 30-day average, on volume on the SPY is around 78 mil. Now, in the after hours, we anticipate we'll probably get there. It would make some sense. Now, when we look back at what's happening here on NQ, and NQ did reach its 30-day averages, so you know, you can see we started off this morning with a strong dip. We bounced. Now, I'm going to give you a zoom out. We're going to come back to the 1 minute so I can show you volume. But really quick, let's go over the 1 hour. This is our supply and demand zones. Okay, we have a supply zone from a 30-minute supply established right here. You come into it multiple times and get rejected. Our demand on the downside, so far we made a higher low, but this was established right here on our previous drop that we made. Now, I'm going to go into ES here in a second, but I want to focus on the Nasdaq because this is leading the market. I'll explain a little bit more going into this. Now, with volume coming into the market, let's talk about where we are. And I'm going to try to do this as quick as possible so I don't waste too much time. We can see beginning of the day, really hot. Now, I commented during the live stream and I commented on Twitter, and both of those links, you can check them out. They're down below. When we looked at this, what were we talking about? The concern here for the upside, getting a bounce, was that you were seeing pretty good volume down here. If you really look right here, decent volume from buyers as well. So you were declining in volume as you were pushing up, but you can continue to see it was a fight, and you pushed down with, in my opinion, lackluster volume. Indicating that, in my opinion, again, this is my opinion, that buyers were not as strong as they have been. And what do I mean as they have been? When we go back to previous days, we really saw them carrying us to the upside. So I recommend just going back and looking at some of those previous videos and what happened there. And then we kind of just held down with declined volume. You had a bit of a spike here when you made your daily low right here around 12.25, and then you ultimately ended up bouncing back. Your volume to the upside, again, in my opinion, was nothing that aggressive. I believe we did not see a lot of follow through today. Now, it could be because OPEX, whatever you want to consider that, but the volume here at the end of the day was not convincing, okay, for the upside. But nonetheless, you ended up bouncing out of demand once again. Now, these levels are all on Twitter, so if you want these, you can save them. They're going to be on the newsletter as well, so make sure you're checking that out. And so it's all there for you. Now, where we come from this, we ended up bouncing into the day right below 12.4. Funny enough, now if you remember yesterday's video, what did I say? Where do we start getting bearish? Now, obviously, we want to establish some new lows, right? We want to make a lower low. We want to get below 12,000 to really get bearish, okay? But we can start maybe even getting a little bit biased or a little bit siding with the downside thesis if we continue to hold below 12.4. Now, why 12.4? Now, again, these are all based on key levels. You can go back and backtrack. You can, verify this if you want. I really don't mind. As simple as that. Now we can see a few things. You can see our swing lows that we had back here March 14th, 2022. That's where we held below right now. Now, if we go back again, you can also see coming right here into, I believe this was May, I'm sorry. We held below this one, which again, we pop up, we reject off of 12.9. Second test, we come back down, we reject off of that May level, okay? Now, 12.4, where does 12.4 come into play? If you zoom out a little bit more, you can go all the way to our weekly time frame, and then we can also see right about here, which again, we've been covering for some time, your swing high that we had back here on, I believe, August 17, 2020. As we zoom back into the chart, I like to just show you where we're getting these so you can do your own due diligence and you can get a little bit more information for yourself. You can see we're holding below that level there now, 12.45. So again, we're getting below these key levels one by one now, and we're making lower highs, okay? Now, what is our fundamental thesis right now? Okay, we're constantly looking at supply and demand and volume. That's been the telltale signs for a continuation and overall finding plays in this market. And it's funny, someone commented in the video yesterday, like, he doesn't look at divergences. He doesn't look at the RSI. He doesn't look at the MACD. This guy doesn't know what he's talking about. And again, to each their own. If you use those, I respect you. Do what you want, okay? Now, I do believe those can be helpful on the daily and weekly timeframes. But using the RSI and MACD on a 5, 10, 15-minute chart, that does nothing for me. Right? That doesn't measure buying pressure. That doesn't measure supply and demand. That doesn't measure any resistances. All that is tell you based on candlesticks. Okay? That's what you need to understand. We don't really care too much about candlesticks unless we're getting significant volume behind it. Okay? That's what we really need to know here. So let's talk about where we're at and how we're functioning and where we're going right now. So we're getting the bounce, but we're still below 12.4. After hours are still going. You could close above, but we'll see. Now, next up, we got ES, and I'm going to tell you right now, I still side with the downside, but we're still slightly above demand. And I have some stocks that I'm in and that I'm still interested in. Now, looking at ES, a little bit more interesting. We're still in demand. You did bounce, right? Goes all the way down here, about 40, 50. You bounced, okay? But you made a lower low, okay? So we're making now lower lows and lower highs, okay? Again, not ideal. We can see as well, we're holding below some of these major levels. One of the biggest of all levels here being 4,100, right? Kind of been a telltale sign. Funny enough, if we look back at yesterday's price action, guess what happened? We bounced at 4,100. Right when Bullard spoke, boom, tick, tick, doom and gloom. Right back below 4,100, and we're there now. So I have to assume if we maintain below 4,100, high probability of us breaking this demand. Now, does that mean that I'm shorting the demand on SPY? No, it's not what it means. No. Now, for me personally, the move has been trying to find equities that I like, that I believe have potential to the downside. For instance, looking at something like AMD, but I want to show you Microsoft first. We've been talking about Microsoft, haven't we? You guess what, ladies and gentlemen, today was one of the most bearish names out there. You filled those gaps to perfection, right? More beautiful than the thigh gap of your local gymnasium, if I will. And as you can see, you have the one gap fill up about 264, next gap fill 258. Boom, boom, right? We've been talking about these. We've been trying to spot weakness in the market and some of these weaker names, and those are playing out the most successful. Okay, so when we go a little bit further, now I'm looking at some of these other names I'm interested in. Like right now, I like AMD to the downside, right? Why do we like it? Well, if we look at some of the past months' movement, it's been probably the most volatile, one of the most volatile to the upside, right? From 59 up to around 90. Okay, we all remember that great push because guess what? We traded it here. Funny enough. Now we have a daily gap fill right back down to around 75. I like AMD down to 75 as long as it remains below 78.5. And I'll go into that here more in a second. Now, more downside opportunity. Meta, we've vaguely talked about this one. You have downside, in my opinion, around 160, about 162. And then you have a daily gap fill again at 153. Meta downside. It makes sense. It's been moving strong. It's been moving good. Where's this downside thesis here, though? I'm looking for downside if you start to break below 172.5. So break back below 172.5. That's your go signal, okay? That's what we're looking at. Now, it's important to know we have a 3-day weekend, okay? So no trading on Monday, President's Day, El Presidente, El Deo. Now, I know a lot of you are going to have some negative statements about our president, okay? But I want to encourage you. Right now is the time for unity, okay? And not division in our nation, unity. So just think about that, okay? Jefe knows, right? So as we move forward, let's continue to discuss where we're going. Now, those are the downside stocks I'm liking a lot, okay? I'm liking those a lot. Like, butter me up and call me a biscuit. I'm liking them a lot. Those are my favorites. Now, if we look at though, you need to, and I have to say this on repeat because people tend to take what I say and run with it. I dislike pancakes, and they're like, you love waffles? I'm like, I didn't really say that. I just said I didn't like pancakes. It's nothing to do with waffles. Internet, y'all are crazy, right? So what do we do though? Do we look for downside immediately? Do we ignore the indexes? No, we do not do that. On the contrary, we focus on these indexes. We focus on where the market is right now. And then we trade when the indexes give us the signal. If they continue to hold below these key levels, then you're setting up on those equities for the downside. Now, I said earlier, what did I say? I said the Nasdaq is leading us, okay? Now, as we look at the Nasdaq, you've been getting, a little bit to the hammered side, right? We've been in this range bound area, chop, going back and forth. Now, underlying behind the Nasdaq is, in my opinion, the big six. Okay. Now and some of these are in the SPY. So I know before y'all go all AWOL on me, just relax. Please listen before we go crazy. Now, when we look here, the big six give us a lot of indication. And on this move to the upside, I was hyper focused on the Nasdaq and the big six specifically: Apple, Microsoft, Google, Amazon, Tesla, Nvidia, right? Hyper focused on those, right? Because if large cap equities are moving up structurally, then a move is validated, right? So for instance, going back, and I like to repeat myself so people make sure we understand things. If we look back at the SPY movement from October all the way into December, we really didn't go nowhere on these big equities, chop back and forth. But if we go to SPY, what happened here? Well, from October 13th, all the way into December 14th, we made higher highs and trended to the upside. Arguably better than what we did here from late December into right now, early February. You could argue this movement is actually, you can't argue, it just is. Percent based wise, you moved a higher percent to the upside. Okay. So when we go back to the big six, it makes you question, well, the SPY was moving like this. Why weren't equities moving up? Why wasn't Apple bouncing up? Why wasn't Microsoft bouncing up? Why wasn't Nvidia and Google and all these big names, Tesla? Why? Right? The move wasn't validated because Nasdaq was not following. And when we look at a market from a risk on, risk off standpoint, we want to drop money heavy into the market when it's a risk on aspect. And the Nasdaq, more than the Dow and SPY, usually gives us that signal. So this market move was all led by the Nasdaq. Okay. So again, giving you back to a visual of NQ going back October through December, you were making higher highs here, but we slumped back down in November. We came up, we were very volatile back and forth. Not as much upside as what we saw in the S&P. So again, I want you to understand that. So where we're at now, we're seeing some of this sideways movement up here. Very interesting behavior. Now, what do we want to say here? Am I saying you're going to drop? Am I saying you're going to rocket? No. We need to understand we're still clearly in a range. When we look at the big six, I'm very much watching these at 1,000 flat. And I don't find it coincidental. That's exactly where you're bouncing, okay? Literally to the tick at 1,000. That's where you're bouncing. It's kind of hilarious. Now, if these big names start to break down further, I believe you're in for some pain. But I think this is one of the best indicators to be watching, the Nasdaq combined with these. And really, you just need to be watching. How is Apple reacting while the SPY drops, right? We saw it previously this week. The SPY was dropping, but Apple was maintaining at local highs and then eventually ended up breaking out $3 to the upside towards 156, 157. Okay. So that's what we want to watch, is how are these underlying equities responding? Now, again, I still believe, even though we bounced into demand, I still think we look bad. So it's important that we watch these equities, though, above all. Watch the indexes, watch the underlying equities as well. And then you'll get your answer and get your movement. Now, this week, I will say, even though I'm bearish on something like AMD, you have NVIDIA earnings on Wednesday, so make sure you keep your head on a swivel. Be careful. Nothing's guaranteed money, so I have to say that, or people like start to blame me for all their life's problems. They're like, Tyler, you made me lose all my money. I'm like, no, you were just broke already. Like, you're blaming someone else. Congratulations. Good for you. Can't take responsibility. Now, when we look back at where we're going further, let's look at some, and we're going to go look at the option chain in a second, so give me a sec. VIX. Like I said, we're finally getting some real movement here on VIX. Now, I'm going to go to something like the 1 hour to give you a better visual. When we look at the 1 hour, we're finally getting this volatility. Like, God bless. About time, right? So we started shooting up on, last Thursday, came back down. Yesterday, we shot up during the market hours. We had a little bit of downside on the day, but ultimately, we're still sitting like where we were yesterday. So I'm fine with this, okay? Now, it's important to understand VIX is not a measure of if the market's going to go down or go up. It's a measure of derivatives in the market, okay? So you have to understand that. It's based on SPX and the underlying options chains coming in there. So you have to understand that. And we've very much seen some pretty aggressive options coming in on the SPX very recently. So we need to understand that as well. But going further, let's look at something like TLT. So I like VIX. I think it has upside potential. It still looks good. We wanted to get back above 24, though. Just want to let you know, VIX over 24 is buenos and nachos. Now, if we look at TLT, you are still down on the day. Giving you a better visual here, something like the 4 hour paints a really good picture. You can see you were holding the trend line, holding higher lows, and you broke to the downside. We had a test of about basically 101 and not the test of 100 yet. Think TLT will test 100. It's generally a great sense of the health of the market. When the Nasdaq and SPY have been trending sideways, you've seen TLT really get hammered, which has been a good underlying statement of some weakness in the market. Now, going further into bonds, and I'm trying to cover these questions because I've seen them all down below, and I want you guys to know, I read almost every single question. Like, even if it's rude and mean, I may not respond to it, or I might say, hey, thank you for supporting the channel and giving me $1 because you showed up. I appreciate it, right? That's cool. I read all of them. So just know, if I don't get to your question or it's not skipped over, I try to answer it in the video, right? So when we look at these, unless it's about a meme stock, please, dear God, do not write me about meme stocks, okay? Or just tag me on Twitter. It's a better way to do it. Now, when we look at what's happening here on yields, the 10-year and the 30-year. The 10-year got to 3.92. That is bizarre, in my opinion. The 30-year, 3.97, right? I'm watching these to see if we're going to get that 4% test, and you're dangerously close. Now, again, everyone here is like, Tyler, what are you talking about? The 10, 30 year? I don't even know what we're like, Tyler, you're losing me. Now, let me show you why I like these. Now, you probably been on CNBC and they'd be like, guys, the 2 year is very important. I'm not saying the other yields aren't important, okay? I'm not saying that. But one has been arguably one of the best indicators for predicting a recession, predicting some nasty drawdowns, and really showing you maybe the end of a recession better than most. The 10 over the 30, the inversion yield when the 10 crosses above the 30 year. Okay. Now, most bonds have already surpassed the 30 year. The 20 years already surpassed the 30, the 2, everything else is already past the 30. The 10 is usually the last bond to do so. Now, if we look here, you've already inverted it. Back in September, you were sky high at 100, 105% inverted. So you were well over, okay? Now, giving you a visual backtrack, 2018, we had a really nasty drop to the downside, and we arguably should have had a recession, but Trump really encouraged spending. The Fed used all their tools. If you weren't trading then you really didn't know. But it's important to realize that you can go look back at the market. It was a pretty nasty spike down we had back in 2018. Going back further, we had the housing bubble. Everyone remembers that. Didn't end so good. Then we have the .com bubble right here in 2000, and you just don't have enough data to go back any further. So I recommend just looking at this. Anyways, so that's where we're at now. Now we're at, COVID and inflation galore and, stagflation. Oh, yay, this is good for the market. Now, this is where we're at right now. Okay, so just giving you a visual of what you can see and what I'm looking at. Now, we broke the higher low trend, but we're still stagnating and gradually going up. I believe as long as we are this close, 1%, 2% away from inverting, you're really within 5%. It's really a danger zone of where the market is. We've seen the Fed, specifically yesterday, Bullard and all these other Fed members come on, even though these aren't voting members, they've all said, look, we are pro 50-point hike. Now I'm going to tell you right now, even though, and again, I have like a short in the market, I'm going to tell you something from the Fed's viewpoint. Okay. At the end of the day, when we look at the Fed and what they're doing, you need to understand a few things. Okay. Their priority is not if the stock market is going up or down. They don't care about that. They care about the underlying health of the economy. That's their priority. Okay. So when you look at this, don't say, oh, well, the market's too high, the Fed has to be bearish. No, that's not what they have to do. What they have to do is make sure we don't go into a period of a wage price spiral, or inflation resurges, or, it gets entrenched, right? We don't need that. That's what the Fed doesn't want to happen. Now, we've seen the data from PPI and CPI, and I believe this is what, like I said, go watch last week. Even when I was bullish, what did I say? The thing that's going to bring you down, the thing that can hurt you really bad in the market is if inflation starts to spike back up, and if energy comes back into play also. Now that is bad news bears. Now we're starting to see some of this happen based on PPI and CPI. And then what we saw from the Fed says, like, look, we've seen the battle is harder than we anticipated, but we have not heard from Powell yet. And Powell will ultimately be the dictator of this, if you will. He will tell us whether we go up or whether we go doom and gloom to find new lows. Now, finding new lows, I'm going to tell you right now, unlikely right now. I'm going to say unlikely at the very least. We would need very bad news on the economy to find new lows. You have to understand that. If we look at something like Apple, Tesla, Microsoft, those have all had over like a 50% drop. Drastic. Very rarely happens. So you've already, and people, it's like, well, Tyler, we're not in a recession yet. I'm like, you're pretty much in a recession. Like, let's be real. But like, we need to understand, like, go look at the yearly chart. It's pretty terrible. So when we look at that, you have to understand that. So when I'm looking at downside, I'm not looking at it from, we have to find a new low. Understand that. I'm trying to be reasonable, right? And I'm always trying to find something that maybe can be wrong with my thesis. But when I look at the market, I don't think we're going to have a 50-point BPS hike. I just don't think it's going to happen. The Fed is not going to want to flip-flop back and forth. But what you need to be watching and listening for is the tone of Jerome Powell, okay? And I have to believe the next time he speaks, it will be terrible for the market. I'm going to tell you right now, there's no way he can look at PPI and CPI and whatever the next data pool is and say, oh, this is fantastic. Oh, inflation's coming back. Whoa. There's no way he's going to look at it from that viewpoint. So that's what we have to be prepared for. And we need to be looking at the timeline of when they see us getting back to 2%, right? Flat on inflation, which is looking longer and longer. So that's what we need to understand. That's my viewpoint of the market. I'm going to have a deeper dive on Sunday, so make sure you check it out. Make sure you stay tuned. And again, hope you got something out of this. I'll see you on Sunday. Like, subscribe, do what you got to do. And if you need to unsubscribe, I guess just do that if you have to. See you later.